Hi, everyone, and welcome to today's webinar. My name is Monica Bechtel, and I am with the New Mexico Small Business Development Center. Today, we have Ed Vigil joining us, who is a certified SCORE mentor. Ed will present today's topic, Fund Your Business in 6 Steps. Thank you so much for joining us. And without further ado, I will hand it over to you, Ed.
Okay, thank you, Monica. First of all, I want to start off by saying that this entire presentation has been put together by Stephanie Skaggs, who is a SCORE volunteer in Albuquerque. She does amazing work, and Stephanie knows everybody, and I believe everybody should know her. So if you ever get a chance, try to reach out to Stephanie Skaggs at SCORE Albuquerque, because she's the one who put this whole presentation together. Next slide, please.
Oh, it doesn't go. Oh my gosh.
Okay. So just a couple of instructions here. Please mute your audio. Make sure to set your Zoom ratio to fit window. We will be using the Q&A function to take questions, and write down your question slide number that it relates to so that we can reference it. Next slide, please. These are basically some websites that NMSBDC has put together for you. We're coming out of a post-pandemic COVID environment, and these are some useful websites that will give you some directions on what to do post-pandemic. So next slide, please. And again, the New Mexico SBDC is a great resource. And I always tell people that, anytime you can get quality advice at no cost to you, that's very much a no-brainer. So you should be taking advantage of the counseling and the training that the New Mexico Small Business Development Corporation gives. Next slide. This I'm just going to let you read. I'm going to give you about 10 seconds, and then I'll just ask the next slide. Oh. So the objective about this seminar is I hope to give you value. I want you to learn about business funding options. We're getting more of a 10,000-foot view of finance. I'm giving you very general information so that hopefully it'll give you direction on where to go, where to seek financing for your particular situation. Next slide. These are the things that we're going to be going into. Small business financing facts, 6 steps, credit versus personal versus business. I'm not going to go as much into personal today. I think there's a lot of information you can pick up just on the the web, but categories of funding, how to determine the right funding method, how to pitch to the right funding source, and resources to help you. Next slide. So this is the title of our thing, Funding Your Business in 6 Steps. Next slide. A little bit about me. I'm the managing director for the Adrigan Group, mainly doing some private investment work. I started out as an investment banker. Bank went bankrupt. I went into some financial debt. I had a car repossessed at one time, which seemed like a bad thing, but it turned out to be a blessing for me because that threw me into a whole different world of finance. In case you don't know, if you're going to work for a financial institution, they run credit checks on you. So I was thrown out of banking. I mean, I couldn't get into banking because of that. But I got thrown into the world of private finance and alternative finance, which, like I said, even though you would think having a car repossessed is a bad thing, it turned out to be a blessing for me. Next slide. Don't really have time to do this right now, and I apologize for that. We only have 1 hour, so I'm just going to go to the next slide. So a little bit of overview again. We've seen this slide before. Next slide. So obtaining capital and managed cash flow are the biggest challenges facing small business owners today, as you probably already know that. let's just face it, small businesses have a tough time. Personally, I think it's unfair and the way that banks deal with small business companies. And to be honest, I don't really see that changing anytime soon. Notice I use the term bank though. Bank is only one type of financing that you can be potentially looking for. There are many other types of financing. When you think of bank financing, there's two different worlds. When you're a small business owner, you're many times going to the bank looking for financing for payroll. Whereas if you're a large business, you might be going to a bank seeking financing to buy back stock shares. I mean, those are two entirely different worlds, right? And most banks would prefer to lend to a large business than they would to a small business. Next slide. So these are the reasons why you're rejected: lack of sufficient cash flow, company revenue is too small, insufficient operating history, insufficient business credit. So cash flow is one thing that you all have to be very careful as you're monitoring your business. You literally can be so successful that you sell yourself into bankruptcy. You might get a big contract and you can't quite fulfill that, and so you lose a contract, or your margins might be too low. The bank will look at revenues. If your revenues are too small, typically the number most finance institutions, including non-bank lenders, are looking for is around the $10,000 a month revenue. So that's typically the number that they're looking for. Insufficient operating history, you're a startup. It's very difficult to find financing. Insufficient business credit. We'll talk more about that in depth later. Next slide. Again, the statistics are grim. Only 30% of small businesses are approved for bank loans. And again, notice it says bank loans. I want you to remember that. Whereas 70% of big businesses are approved for bank loans. Again, the purpose of this seminar is to let you know that there are other sources of financing available to you. Next slide. Oops, I think we skipped one. Oh, okay. So what do you do when you need small business capital? Be prepared. Understand your circumstances. Are you, do you have a lot of collateral? Do you have no collateral? Know the types of funding you can qualify for. Can you qualify for, a loan, or can you qualify for factoring? If you know that your, business history is too short to go to a specific lender, then you might have to wait a while. That's part of fixing up your trouble spots. But most importantly, don't give up. I think I'm blessed in that I get to work with small business owners, and I admire men and women who, really get out there and try to start something. And again, I would just don't give up, keep going. Next slide. So here are the 6 steps. You need to take a personal inventory, know your credit scores, be prepared to get business credit, prepare a business plan, determine the right funding strategy, prepare the right pitch. For the purposes of this seminar, I'm going to focus a lot more on step number 5 than I am on the other areas. So next slide. Personal inventory, this is kind of self-explanatory. What do you have? What do you owe? You should have a good idea of what your net worth is, assets minus your liabilities. And again, I will tell you not to give up, even if you have a negative, net worth. There's still ways to work out of that, right? And then these are different things here that are assets that you can have. Cash value life insurance, I'm just going to step aside real quick on this. You might want to look into life insurance a little bit deeper after this webinar. Life insurance is starting to turn into an asset class, which means that there now is a secondary market for life insurance policies. No insurance producer can sell you a life insurance policy as an investment. That would be illegal, okay? But when you have a cash value life insurance, there's cash value in there that hopefully that you can pull out of, or going forward and currently, there are markets for life insurance policies that you may be able to tap into for cash in the future. Next slide. Again, these are just some things that you can put together on a personal financial statement. Next slide. Know your personal credit scores. You know, here's some information. There's 3 credit bureaus. You can go once a year. I believe it's annualcreditreview.com and order your tri-merge. A tri-merge is just a term that says your Equifax, your TransUnion, and your Experian credit bureaus all at one time. Next slide. I think that's pretty straightforward. Again, I'm not focusing on the personal right now. So next slide. There we go. Thank you. FICO scores are the 800-pound gorilla. Almost everybody uses FICO scores. Vantage scores, there's a few major large banks that use Vantage scores, mainly because they're trying to get away from FICO. So if you go to a large bank like a Bank of America or a Citicorp, and you hear the term Vantage scores, it's the same thing as a FICO score. It's just that it's a different group of people that are using it. Next slide. Again, you should be checking at least annually your personal credit scores. Check for errors in reporting, pay your bills on time, pay down credit cards. All these things are kind of self-explanatory. Next slide. Business credit. Here's where you need to focus on. Dun & Bradstreet, if you do a Google search, you should early on get a DUNS number, D-U-N-S. DUNS number is nothing more than having a credit score for your business. Experian and Equifax do also offer business credit scores, but they're not used as much as Dun & Bradstreet. So I would highly recommend you go to Google Dun & Bradstreet. I think it's dnb.com, and they'll have some places there where you can sign up for a DNB or a DUNS credit score. There are companies that offer to do it for you. They typically charge like $100, but my middle name is cheap, and so I think if you can do it on your own, you should do it on your own and save that $100. If you can, you should try to find vendors that report to business credit bureaus. Not all of them do. When you have a creditor or a vendor, ask them if they do, and ask them to make sure to report as you are building your credit with them. Next slide. Separate personal credit from business credit. I see this a lot. A lot of people think they have a business credit card because it has their business name on it, and they're using it as a business credit card, and for their own personal accounting purposes, they're keeping that as a business credit card. But then when they pull a personal credit report, they see that credit card on their personal credit report. So you need to be very careful and make very sure that when you sign up for a business credit card, that typically it will be done with your EIN number and not with your social security number. You'd be surprised how many people think that they have a business credit card when in actuality they have a personal credit card just with their business name on it. Next slide. Okay, so this is pretty straightforward. You should have an EIN number, which is the same as a social security number. You should have a physical business address. That's becoming less and less important these days with the internet and e-commerce. You should have a business phone number. You need to have your city licenses, your state licenses. You definitely should have a separate business bank account. A lender, when they're, if you're applying for a loan, they're actually going to go through every one of these and they'll check them. I purposely left out the legal entity for last. If you have a sole proprietorship, that's basically the same as having nothing, really. You should have an LLC or an S Corp. The reason being that when you have a sole proprietorship, a lender or a bank or an investor has no idea where your personal assets end and where your business assets begin, right? It's all just one thing, basically. So I personally don't know why they ever came up with sole proprietorships, but you really should have an LLC, S Corp, or C Corp, and have those set up by somebody. Next slide. Is a business plan really necessary? Yes, but not in the way you typically think that it's necessary. Next slide. So depending on who you're approaching for financing, you may or may not need a business plan. Most of your banks and business lenders will not require a business plan. Really, they just want your application, your personal financial statements, things of that nature. But really, the importance of a business plan is for you as a business owner. This is something that can change over time. It can be, you can adjust numbers up or down. You can adjust, your statement of business over time. Really, it's more of a model for you to let you know where you're at and how to get there. And it should give you benchmarks on when you get to certain points. So next slide. And here's just some basic information on what a company profile has. What a business plan has. Company profile, industry analysis, customer analysis, marketing plan, financial data. Couple of things. On your marketing plan, you really got to make sure that you do not go way overboard in your numbers. If I get a business plan and the marketing plan tells me that a small business is going to sell $10 million in 1 year and it's a startup, I'm pretty much just going to discount that. You can look at other, like I said, let's say you have a veterinary business. You can find numbers online about what the average sales are for most vet practices, and you should plug those numbers in. One thing I personally like to see, I do like to see a little bit of maybe some negative numbers in there. What does that mean? I think that means you're being more realistic. Your first year, unless you have a bang up sales type process, you might be losing money your first year. And if I see a negative number that first year, that doesn't concern me at all. I think people are being realistic. So again, just be very careful with numbers that you put into your marketing plan. Next slide. I think we're supposed to take this out. I wouldn't go with this. There's a very simple model that I use outside of a business plan. It's called a SWOT analysis. SWOT, and it's like a business plan on one page kind of thing. And basically all you're doing is listing your strengths of your company, the weaknesses of your company, the opportunities for your company, and the threats to your company. And when you sit down and put that on a piece of paper, and it shouldn't be more than 2 pages at the most, that's a very simple business plan that you can follow. Next slide. Budgets are extremely important for anybody in finance. So any lender is going to look really hard at your budget, right? There's a term, if you are a startup, you're going to be doing what's called a pro forma budget. So your banker, your lender, your investor will say, what is your pro forma budget? Pro forma is just a term that's used. It's a Latin term, means as if, right? So pro forma is a budget That's done with numbers as if you were a real company or as if you were an operating company with operating history. If you're an ongoing business, then you have ongoing numbers to put into your budget. So so if you hear the term pro forma, that's what that is. Next slide. That should have been taken out. Okay. So so determine your funding source. Your business needs capital, right? There are very, very few companies that never have to seek financing. I personally only know of one. And you should be aware that there are lots of sources, not just one source. And that's what I hope to get into more now. So next slide. There's the equity choice. Next slide. Debt choice. Next slide. Alternative. So I tend to live in the alternative world. That's where my niche is. But when you go looking for finance, you basically have three choices. You have an equity choice, you have a debt choice, and you have an alternative choice. Equity, people always think is the best because they don't have to make any payments. Debt, they worry about because you have a monthly payment that you're taking on. Alternative could be a combination debt equity type thing, or oftentimes alternative finance means more expensive but easier to get. When I said equity can be expensive, you have to really think through if you're going to raise equity financing, what the future of your company is and how successful you're going to be. And you have to be realistic about this. If you're looking to raise $100,000 and somebody gives you $10,000 for 10% of your company, you think that's awesome. But, in a couple of years, your company grows, is very successful and grows to 10 million in revenue. Well, 10% of that company is $1 million. You've given somebody $1 million for $10,000. That's very expensive money. So again, when you go looking for financing, you have a debt equity choice. Just think that through before you go with the equity or the debt or the alternative. Try to see or think through where your company might be in the near future. Next slide. Equity. Pretty straightforward. As an investment, contribution, stock or shares, it involves company ownership. This is the thing that everybody loves about equity and money invested in a company that does not necessarily have to be paid back, but is expected to deliver a rate of return. So it's the highest risk capital with hopes of high returns, but no guarantee. Again, that example I gave before, it could be the most expensive capital for you, the business owner, but it could be the highest risk capital for the investor. And for that reason, they're going to demand a higher rate of return. So you have to always remember that when you're thinking equity. Next slide. I apologize for the thing here, and I don't know how to fix it. Some of the things that you should know that are sources for equity: selling assets, income from second job, cash value of life insurance. I mentioned briefly a little bit about life insurance before. It's really something that on your own, I think you ought to take a look at and see what life insurance can do for you. Not only is it becoming more of an asset, but you can pledge a life insurance policy on a loan and things like that. Business equity, going down straight the line, friends and family, angel investors, investment clubs, crowdfunding. We're going to be talking about some of these more in depth as we go forward. Next slide. Personal retirement rollovers. This is something that's not relatively new, but is becoming more popular. You can go online and look up personal retirement rollovers for business startups. This is basically tapping into your retirement funds. And there are ways that you can pull out those funds without being taxed for it or being penalized for it. You really do need to have an expert to set this up for you so that it is done correctly. I don't know of anybody that's ever done it on their own, and I don't think that you can. But if you have substantial retirement assets and you want to start up your own business, well, you have a source of funding right there. So just keep that in mind. Google personal retirement rollover for business startups, and you'll find probably more than likely a list of providers who are willing to do it. And as you go through their websites, you'll see them explain exactly what it is more in depth. Next slide. Angel investors. Angel investors can be anybody and everybody. They're known as private seed investors, usually familiar with the industry or technology. There are some angel investor clubs like the New Mexico Angels. High net worth individuals, you would be surprised at how much funding is done through that. I'm in Albuquerque. I can think of a gentleman who runs a gold store. He sells gold jewelry. I can't give his name because he doesn't want to give it out, but he is also a very active lender, in Albuquerque and in New Mexico. He does very expensive loans. It's not cheap to go to him, but he is a lender. He's a high net worth individual. There's another restaurant owner here in Albuquerque. Again, I can't give his name, but he's, makes really amazing carne adobada burritos. I was talking to one of his employees at one time, and he told me that the owner has so much money, he doesn't know what to do with it, right? This is the kind of thing where you can pitch to somebody. I always encourage small business owners, if you know another business owner, another successful business owner, approach them. I mean, what do you got to lose, right? It's a pitch. They can say no. On the flip side, what if they say yes, right? People who are angel investors are typically looking for more of a return than they can get with their banks or their CDs or their IRAs. Many times they might be looking to invest in something in a similar industry. So the restaurant guy maybe might be interested in looking at another restaurant, or, there's no 100% guarantee type thing. They may be looking for diversification. Maybe they don't want to do another restaurant. Maybe they want to do a retail store of some kind. So I really encourage you, if you know some successful business people here in the state, give it a shot. See what they, see if they might invest in your company. Next slide. Venture capital. These are difficult funds to get. I think we're starting to see more and more venture capital investments in the state of New Mexico. 10 years ago, you pretty much had to be a spin-off of Sandia National Labs or Los Alamos National Labs or something from the university to get any type of funding, venture capital funds. Now I think we're starting to see more high growth, high tech type companies in the state. And those are typically the type of companies that can go to a venture capitalist. They're not looking for a restaurant. They're not looking for a mom and pop type business. They're really looking for, your engineering / high tech / high growth companies. So as you're usually very risky capital and above average returns are expected, you should expect that if you go to a venture capitalist, especially at an early stage, you're going to give up a lot of equity in return if they like your company. And when you go for venture capital, funding is usually done in stages. You'll hear the term seed round, A round, B round, C round. Whoever comes in at the earliest gets the highest return, and then the next level down gets a little bit lower return, and then the next round of funding gets a little bit lower rate of return. And that gets kind of complex when you got to figure out, who gets what in each different seed round. But if you are a high growth, I guess would be the first thing to think of, but more than likely a venture capital or high tech or engineering related firm, venture capital would be something that you might want to consider. Next slide. Private equity. So this is my bailiwick. I work with a lot of private equity firms. These are the type of investors that are really looking for larger companies, and they're looking for established companies. There's very few times that you could approach a private equity firm with a startup, but I will talk about that in just a minute. Private equity firms are usually funded by pension funds or family offices or endowments. And what they do is they go out and buy existing businesses. When they buy these existing businesses, they go in and they have the management resources to hopefully improve the operating procedures of the company and hopefully improve the value of the company so that 5-10 years down the road, they can sell the company at a substantial gain. If you are looking to retire and get out of a business that you may have, private equity is an amazing resource for that, right? If you are looking to maybe have an investment of some sort, which isn't really what private equity does, but you find out that, let's say you have an auto shop and a private equity firm has an interest in buying one auto shop and then adding a whole bunch of other auto shops onto that one. That first one is called a platform investment, and then everything else is called an add-on or a roll-up. If you have that initial platform investment, many times a private equity company will come in as an investor and then help you straighten out your books, all that, and then help you build up by acquisitions your company itself. But that's the tricky part. Normally they're looking to buy companies to add on to companies they already own. But if you have a company that's in a field that they want to get into, there's a chance that they might invest in you. Next slide. Next slide. Debt is a loan, must be repaid. Mark Cuban says anybody who gets a loan for a startup is crazy. He's been very successful, so I'm not going to argue with him. It is an option. Keep that in mind. Debt is always an option. If you can get debt from friends and family, that's better, I think, as a startup, if you're a startup, than if you can get debt from institutional like a bank. But if you are an established company, debt is kind of an ongoing thing that you deal with day by day because you acquire debt. Next step, the slide. Loans are approved on 5 C's of lending, which you probably have heard before. Cash flow. Next slide. Collateral. Credit scores. Character, reputation. And conditions. Next slide. So sources for debt, credit cards. If you have personal assets, can you use a credit card? Can you pull some money out of a home equity loan? Is your credit good enough to do a signature loan? Asset-based loans, do you have anything that you can borrow against? Business debt goes into a lot of other type of financing becomes available. Again, you can get a business credit card, bank loans, lines, SBA loans, microloans, we're going to be talking about those. Asset-based loans, revenue-based loans. We're going to be talking more about those in a minute. Next slide. The SBA. SBA has probably some of the best lending programs out there. You need to understand that the SBA doesn't actually lend money. They guarantee to lenders, if the borrower defaults. So you can have an SBA loan for commercial real estate, and there might be I'm just throwing out a random number, 500 approved SBA lenders for commercial real estate loans. What you need to do is that it's an SBA loan, and the SBA has certain parameters in terms of like interest rates and stuff like that. But then again, it becomes incumbent upon you to research, well, which is the best lender for you? A lender in Utah may not be as good for you here in Albuquerque if you're in Albuquerque as a lender in Albuquerque, or vice versa. There may be a lender in New Hampshire who has great rates and originates nationally, and they may be a better lender for you than an Albuquerque bank. So SBA approved means that they offer SBA loans, and every bank will tell you what their underwriting guidelines are and what their market is, geographic market. One thing I will say, and I've just recently ran across this in my business, do not ever default on an SBA loan. That will be the kiss of death of you forever as a business owner for business financing. I had a client who defaulted on an SBA loan. His company survived, numbers got better, they were getting good. He needed some financing. I thought it would be an easy loan to place. I could not place him with any lender because he had defaulted on an SBA loan. So when you take on a loan, remember that that's the one financing product that you never ever want to default on. Next slide. Microlenders, Dream Spring, West here in Albuquerque, Kiva, excellent source if you're needing a small amount of capital. Here it says typically less than $20,000. Some will end up to $1 million. I don't know who that is. I've never seen anybody go that high. One of the things that they really love down at the bottom, you'll see storybook loans. What is a storybook loan? It's a loan that has a great story behind it. For example, we know that on the reservation, like for instance, the Navajo reservation, there's a lack of internet service providers or internet availability. I think there's one company that is starting to do it. But if you were to go to one of these micro lenders and say, I need a small loan to set up something for internet service on their reservation, that tells a good story. It's a feel-good story. And micro lenders love storybook loans, loans that have a feel-good story to it. So if you have something like that, I would definitely pursue a micro lender. Next slide. Online lenders. Oh, we just skipped one. Can you go back to the online lenders? Thank you. Online lenders, I would say the vast majority of them are really just matchmakers. For the most part, On Deck, Cabbage, Swift Capital, they tend to just match borrowers with lenders that they have in their portfolio. What's great about online lenders is that they're easy to apply to because they're almost all, well, online lenders are online, and they've made the process easier for people to apply for business financing. But you're dealing with an intermediary, right? This isn't the direct funding source. So On Deck, Cabbage, Swift Capital, Funding Circle, you will pay a little bit more for the loan than you would have if you had gone directly to the lender. The flip side again is you don't know who those lenders are, so it's worth it, many times to pay a little bit extra so that they can search through their many lenders who would be a great lender for you. Next slide. Peer-to-peer lenders. I'm not sure why New Mexico kind of does not like peer-to-peer lending. So they put up some roadblocks for people to invest in peer-to-peer lending. And because roadblocks are put up for people to invest in peer-to-peer lending sites don't look as favorably on loans from New Mexico as well. You just know that they're out there. I think that should be changing soon. I don't know, but peer-to-peer lending is an option that you can go for. Next slide, please. Alternative funding strategies. This is the world that I live in. More than just history, credit, or cash flow, and very specific providers for each strategy. Next slide. So alternative sources of funding, and we're going to be going over factoring, crowdfunding, convertible notes, etc. Anything with a star there, we're going to be going over. Purchase order financing, I'll talk about with factoring. Customer financing, vendor financing, basically the same thing. You can ask your vendor for some financing. Customer financing, I'm sorry, is different. There are companies that will finance your customer. So let's say you're a furniture store. You can sign up. Back in the day, it used to be General Electric, but now there's thousands of these financing sources who will finance your customer to purchase, say, that sofa or whatever, and typically will pay you, the seller of the sofa, within 2 or 3 business days. Next slide. I'm not sure why that shows up so small in factoring. So there's account receivable loans. Every business, like 99.9% of businesses out there, have accounts receivables. And if you get an accounts receivable loan, that means you are pledging your loan as collateral. I mean, you're pledging your receivables as collateral for a loan. Next slide. Can you go back one slide? I apologize. So the factoring, we'll have to correct that. Factoring is really, really small there. Factoring is where you sell a receivable. So remember, factoring, you're selling a receivable. Account receivable loans means you're pledging a receivable. Okay, 2 different things. Factoring, you have, as a business owner, the ability to sell any asset that you have within the company, right? So if you have a computer or if you have a desk, that's an asset of the company that you can sell. Same way with receivables. A receivable is an asset of the company that you can sell. And factoring companies are set up so that they could buy receivables from companies. It's a very good form of financing, especially if you're a startup. If you're a startup and you get a contract for a janitorial work for IBM, let's say, you go out there, you do 1 month of cleaning for them, you invoice IBM for the work that you did. IBM can take 30, 60, 90 days to pay you, but once the work is done and once you invoice them, if you have a relationship set up with a factoring firm, you can sell that receivable to the factoring firm at a discount. You don't get 100 cents on the dollar. Typically, you'll get 95 cents sent to you right away, and then a little portion is held back for when IBM finally pays, and then that's released. Another thing that you need to be aware of is purchase order financing. Purchase orders are usually done in conjunction with factoring. So if you get a purchase order from Walmart, let's say, that's money in the bank. Walmart says they're going to buy, I don't know, 1,000 wigs from you. And they give you a purchase order for that. That purchase order can be taken to a bank or a factoring firm. A lot of factoring firms do this. And that financial institution will lend you money against the purchase order so that you can make whatever it is you need to make. So if you need to make 1,000 wigs, you take that purchase order, get financing to make those 1,000 wigs. Then you can take those 1,000 wigs, deliver them to Walmart, invoice them, and then the factoring firm, if they set you up on a purchase order program, will then factor that receivable. So it's a pretty neat way to do some financing for, especially for startup manufacturers. Finance, just so you know, is very creative. So whatever you can put together and pull together, that's what finance is. Next slide. Merchant cash advances. I don't believe that there are any really bad financial products, provided that you use them correctly. Merchant cash advances are probably the most popular financial instrument right now. They're very easy to get as a business owner, but they're very expensive. Typically, you get a lump sum. Normally, the amount you can get with a merchant cash advance is 1 to 2 months of your monthly revenue. So if you're making $10,000 a month, a merchant cash advance will advance you $10,000 or $20,000. These are short-term loans. It says here under 24 months. Typically, they're 3, 6, or 9 months. That's what you normally have to pay it back within. And normally, they're taken out of your checking account or business bank account daily. So you need to be aware of that. You'll get quoted a merchant cash advance factor rate. That'll be something like 1.20 or 1.33. I'm a simple man, so I make it easy for myself. If they quote you 1.20, that means, and it's got to be paid back in 3 months, that means that they will advance you $100,000, and at the end of 3 months, you'll have to pay $120,000. Same thing if they quote you 1.33, they will advance you $100,000. $100,000 is always the base, and you have to pay back $133,000 in 3 months. So again, very expensive, but if you know what you're doing, it's useful funds. I see this used a lot by restaurants who, maybe their stoves die or their refrigeration system goes out, and they need money really fast to, get a new stove or new refrigerator. So I see a lot of merchant cash advances and that type of setting, and then they pretty much know that they can pay it back in 3, 6, or 9 months. Just be careful if you get approached for a merchant cash advance, and just make sure you know how to use it. Next slide. Sale leaseback. Basically what it says right there, you can sell an asset and lease it back. Like it says on the slide, usually real estate machinery or high dollar equipment. We have the example of a dump truck here. Because it's a collateralized loan, the credit requirements are not as hefty, but the sale leaseback amount of money that you will get is usually very, very small. If you have a dump truck that's worth, $27,000 and you get a sale leaseback on that, you sell the dump truck to a leasing company and then they lease it back to you, they're only going to buy that dump truck from you for something like, say, $9,000 or $10,000, even though it's worth $27,000, because they're looking at what the liquidation value is. If they had to liquidate this really fast because they don't want to be in the dump truck business and they don't want to hold out for the best price, that's all they're going to really offer you is liquidation value. Next slide. Crowdfunding. I think this is going to get bigger and bigger. If you're in Santa Fe or here in New Mexico, you've heard of Meow Wolf. Meow Wolf raised, I believe, about $1 million from a crowdfunding company. Usually it's done one of two ways, either through a straight note where you offer to the crowd, I want to borrow $1 million at 8% simple interest, or it could be a revenue share. They might say, we'll share any revenue we get, 10% of our revenue until, we've paid off what we borrowed from you. It's kind of what they call the democratization of finance, because normally it used to be that only accredited investors, and I won't get into that, but you had to be a high net worth individual to invest in companies before. Now anybody can go to a crowdfunding website and they can invest in any company that's listed on there. One good thing, which some investors see as a bad thing, is usually there's no prepayment penalty on the loans. Meow Wolf decided to pay off their loan early, which really pissed off a lot of the investors because they were counting on getting a revenue stream, but Meow Wolf had enough money that they could pay off early, and they did the analysis, and it was better for them to do it that way. Next slide. So you need to remember there's a difference between crowdfunding and donation-based funding. I'm trying to remember the names of the companies that are donation-based, but donation-based typically means that people give something to you, give you some money, hoping that your company will take off, and usually you'll give something back to them typically product of some sort. So if you're a bike manufacturer, a startup bike manufacturer, and you're trying to raise, $100,000, you could say, if you donate $10,000, I'll give you a bike, that kind of thing. Crowdfunding really is more about loans and equity, and then typically it's a note or a revenue share note that they give for that. Next slide. Convertible note seed financing. This is fairly complex. If you decide to do a convertible note, I think you should have some professional help structuring it as well as putting it together. You start to get into the world of equity offerings here as well. And so you need to be cognizant of the fact that you might come under certain laws that New Mexico has. And this is just with New Mexico. I'm not talking about, there may be other laws with the Securities and Exchange Commission that you have to comply with as well. Convertible note is exactly what it says. It's hybrid. So it's a note that's convertible into, debt or equity, depending on initially, what you're offering. Says interval payments not required. That's not 100% true. Depends on the type of convertible note that you put together. You got to be very careful. And again, this is why I say you need to have a professional help you put this together. On the conversion valuation cap, investors will get very upset if somebody who came in early gets X amount, and then somebody who comes in later, gets a higher amount than the initial investors. And that has to be programmed into the convertible note. There's something called dilution you have to be careful about. You may have, 80% of the company, but after you do this convertible note, you may only have 30% of the company as those notes convert into equity. So all these different things you have to think about before you even consider doing a convertible note. They are used a lot, but you should have a professional help you with a convertible note. Next slide. There's a lot of options. I hope you're getting the idea right now that there are a lot of different funding sources out there. Really, you just need to know what's the right funding source for me. Next slide. Just go past this one. So here are the basic questions you need to ask yourself. How long has your company been in business? Is it a startup? Is it high tech? Is it profitable? Profitability is kind of a sketchy thing sometimes because a lot of business owners who have established businesses run their companies not to have a profit. So you may need, if you are a business owner and have been in business for 5 or 6 years, you know exactly what I'm talking about. So you may have to do something called recasting your statements so that a lender can see that your company really is profitable. It's just that you're running through a lot of expenses in there to decrease profits. Because remember, we have two tax systems. We have the personal income tax system, and we have the business tax system. On the personal tax system, you're taxed on income. On the business tax system, you're taxed on profit. So on a business side, if you have no profit, you don't have taxes. Do you or your business have assets that you can borrow against, credit scores, how much money needed, and purpose of the money? Next slide. So here's kind of what's open to you if your business is less than 2 years of operation and you're not a high-tech company. You could have friends and family, angel investors. Convertible note, I'm not sure why that was put in there. You can do a convertible note as a startup, but those are typically high-tech companies or companies that have a business owner or entrepreneur who's very well known. Elon Musk could probably do a startup, and he could probably go to any lender and offer a convertible note because everybody knows who Elon Musk is. So that's that kind of thing. Credit cards, signature loans, crowdfunding, factoring, bartering, grants. Next slide. Oh, I see. You should expect that you're going to have to put some personal money equity into any business startup. I don't really know of anybody that can start a business without putting anything into it. So you need to keep that in mind and plan for it accordingly. Next slide. Debt, based on your personal credit and collateral, if you're a small business or a startup with 2 years less or less in business. Next slide. If you're a high tech or a high growth type company, you definitely have more options open to you. But again, there's a lot more work that goes into road shows where you have to talk to a lot of different investors. But the type of investments that are open to you they're on the right side. Angel investors, convertible note, venture capital firms, crowdfunding, and licensing, which we won't go into here. Next slide. If you're a profitable business, then things really open up to you. You can have, you've shown us you have cash flow, that you've built a business up to a certain level. And so lenders like to see that. When they do see, though, a business that's got 4 or 5 years of history behind it, and you have a lack of cash flow or profits, lenders are very wary because in their history or their experience, they know that those tend to be high default probability companies. Next slide. You might want to do an inventory of what your personal, or business assets are. Lenders always want collateral that they can sell or that they can recuperate. No collateral makes getting a loan more difficult. When you go for financing, you should always try to put yourself in the lender's or the investor's mind frame or point of view. Finance, when it gets right down to it, is really about risk management. And if you remember that as you talk to a lender or if you talk to an investor, that they're looking at your business, they may like it, they want to invest in it, they think they can get a certain amount of return, but before they think about return of capital, they're always thinking about, return on capital, they're always thinking about the return of their capital, right? So anything you can do to manage that risk management, is absolutely going to help you get financing. I had one client who was looking for a loan for a fourplex, got turned down, and it was just that close. He almost, they almost wanted to approve him, but there were some things that they had to say no on this particular loan. I wish I was as smart as him. He came back and said, "Hey, what if I give you a quick claim deed on the fourplex?" Right? He's lowering their risk, right? He offered them a quick claim deed, on the fourplex. The lender took it to committee, and the committee came back and said, "Yeah, we'll do that loan now," because he lowered their risk. Next slide. Credit scores, know them, especially your personal credit scores. Business credit, get it. It'll help you in the long run. Next slide. Funding amount needed. This is pretty straightforward. If it's under 20,000, those are the lenders that you could go to. More and more, I am really starting to like crowdfunding. That's a personal opinion, but I think you'll see more crowdfunding done in the future. But personal savings, home equity, micro lenders, peer-to-peer are all great sources for small amounts. Next slide. $20,000 to $100,000. bank loans, Sba Express. Factoring is always available, even if you're $0 to $100,000. Asset-based lending, lines of credit. Next slide. Over $100,000. Again, what we've already talked about. Bank loans, SBA loans, convertible notes, private equity mergers, mortgages, revenue bonds. Again, there's a whole world of alternative lending as well that comes in that $10,000 a month or more that you can go to. Just remember, alternative lending, like I said before, typically means higher rates are more expensive, but it's also much easier to get. Next slide. Always remember what the funding purposes for. Your lenders are going to want to know that. Are you going to open new locations, buy inventory, all these different things, marketing, cash flow. Depending on what the funding purpose is, that'll guide you to the type of funding source. Next slide. I think it's pretty self-explanatory. I think you guys are going to get a copy of of the slides. If you do, you can just go through this and see what funding source matches the funding need. Next slide. So, like I mentioned before, relationship to access of capital and its cost. Basically, you can just figure the easier the money is to get, the more expensive it's going to be. You know, you do have to do quite a bit of paperwork to get an SBA loan, but if you go through the entire process, you'll get the best loan that's available out there. By best loan, I mean best rates and best terms. If you need money for tomorrow and you don't have any business credit and relatively poor personal credit, you can get that money through a merchant cash advance, but it's going to be very expensive. Minimal documentation, typically 1 page, 2 pages at most, but again, very expensive, but easy to get. Next slide. So preparing to pitch to the right source. Anytime you see the term offering memorandum, in other words, you're looking for equity, get it done right. And like I mentioned before, any offering memorandum, I believe, and I apologize, I didn't check on this, but any equity offering memorandum should be registered with the state, or at least the state should know about what you're doing, so you don't get in trouble by offering that out. Debt is typically a loan application. It can be just a lot of paperwork, but you just have to struggle through it for your company. Next slide. The things that go into an offering memorandum, you'll also hear the term private placement memorandum, are just the amount of capital being requested, what it'll be used for, number of shares or ownership being offered. Valuations will be very important to any investor who's looking at your memorandum, and who are, what's the company, who are the founders, is there any liability for investors, etc. Next slide. These are just checklists that I believe you're going to be getting the slide deck, just telling you what you need to do for a loan application. Next slide. So in summary, I'm trying to give you just a very big picture on finance. Kind of educate yourself about where your company is, what your company does, what funding would be used for. Is it going to be working capital or to buy inventory? What is your company's credit rating? Know that before you go to seek a funding source, and that'll direct you to the appropriate funding source. You don't want to apply to the wrong funding source because you're likely to be turned down. Another bad thing about applying to the wrong funding source is, they may run a credit check on you. If you do that too many times, you lower your own personal credit score. You should, I believe, seek multiple types of funding. You might get, tied into a bank loan, but if you can also get a factoring loan as well, and you have the option of either drawing down on your bank loan or selling a receivable to a factoring firm. It's just always better to have more options as a small business lender. Please don't be discouraged. You know, there's financing out there of any type of sort, lots of different sorts. If a lender says, you know, you're weak here, work on where your weakness is so that you can go back and you know, see apply again later. And that's basically what we have. Any questions? Let's see. So I go through this.
I believe there is a question. What crowdfunding website do you recommend besides Facebook?
I don't really consider Facebook a crowdfunder. I believe Meow Wolf used WeFunder, WEFUNDER. But as far as crowdfunding, if you just Google, and that's going to be my answer for a lot of things, if you Google crowdfunding, you will find a directory basically of a lot of different crowdfunding sources. And even within crowdfunding, they have those that specialize in different areas. There are crowdfunders for commercial real estate projects, and there are crowdfunders for small business companies looking for working capital or anything like that.
I believe we have another question here. I must have missed it. Can you review the Sba Express Loan?
Okay, the Sba Express Loan, and you should double check me on this, because I myself have not originated. I arrange financing for companies. That's what I do. I haven't originated many SBA loans. Sba Express Loan just means that you can get a loan faster. Typically, an SBA loan may take 90 to 120 days. If a bank advertises that they offer Sba Express loans, usually that's something where they're willing to take on a little bit more risk, and they'll do the underwriting quicker so that you can get an Sba Express loan. And an Sba Express loan you might be able to get in 30 days instead of 90 to 120 days.
And we have one more question. Can you comment on SBIR funding as a source of non-diluting funding? Are there resources to help with proposal preparation?
So again, I'm not too familiar with SBIR. When you're talking about non-dilutive funding, what he's basically saying is you want to try to keep as much equity of the company as you can. When you get funding that dilutes your equity, that means you might have 100% of a company and you give some equity that means that you get 80% of the company later. And then if you do some more funding of the same sort, you might have 60% of the company. That's dilutive financing. When you hear the term non-dilutive, that means that it's usually debt. That means that if you go in with 100% of the company, you get some financing, you still have 100% of the company. In terms of resources, most of your non-dilutive financing is usually done with what I consider boutique investment banks. And if you Google boutique investment banks, I think you'll get a list of them. These are typically small investment banks, or you might even think of them as a stockbroker who raises money. You know, that's kind of how I think of it. And they have the appropriate licenses to do it. You know, they may be able to get you into a convertible note that may be dilutive, but then there's other things written within the convertible note that will say I can buy back my equity, or I can do something like that. So effectively is non-dilutive. That's a more sophisticated type of financing. And again, I'm not too sure about how the SBIR works with that. So I apologize for that. Don't want to give you bad advice there.
We have another question from Valerie Davis. How do you separate your personal and business credit? I feel like I am always asked to still be a personal guarantor.
Right. Just, you know, I hate to give you this answer, but it's pretty much you're always going to be asked for personal guarantees. Now, if you look at certain financing, for instance, I come from the world of factoring, right? Factoring will tell you that you can have recourse or non-recourse financing. Basically, that means, is it guaranteed or not guaranteed by you? So recourse means that you're given a guarantee. Non-recourse means that you're not given a guarantee. With non-recourse, or where you don't give personal guarantees, again, it's risk management. You will pay more for that type of financing. So just keep that in mind, that if you want financing where you're not guaranteeing, you're going to pay more for it. If you're going through the bank route, banks, they're federally regulated. Almost every bank or bank type funding source is going to ask you to sign as a personal guarantor. That's pretty much just a given. When you go into the alternative lending world, many times you'll see them advertise that, no personal guarantees, non-recourse. But again, when you go into the alternative finance world, that's also more expensive money. And by alternative finance, I'm talking about merchant cash advance, factoring. I believe crowdfunding doesn't ask for personal guarantees, that kind of stuff. Any other questions?
Yes, we have one more question. If I currently have a small business with a spouse, but starting a new business solo, what should I expect, plan for on personal finance statement and those types of items?
I think we're getting into some legal stuff here, but New Mexico being a community property state, I think your wife is always going to be involved in some way or another. Even if you try to, for instance, if you did an LLC where you're the managing member, and your LLC, goes bad, you go bankrupt, most lenders are going to go after you. They're going to go after all the other members that are listed on the LLC. And when they go after you, they'll effectively be going after your wife. So in order to separate that out, that's more of a legal thing you need to talk to. I know there are ways to do it, but you should talk to a lawyer about how do you separate the risk for your wife? How do you start up your new business so that it's strictly just you, and that kind of thing. Any other questions?
Yes, we have one more.
Okay.
Has the economic climate affected the equity investment market? That is it harder now to secure funding?
Absolutely, for the larger companies. You're not seeing any IPOs, initial public offerings of equity, coming out right now. But I don't think that's really, the vast majority of businesses in New Mexico. But yes, the equity markets have affected larger companies for IPOs. Really, the question I think that's more relevant is, have interest rates affected, the lending environment? Interest rates have affected regulated entities like banks who are federally or state regulated. Prior to everything going down to really low interest rates, banks had two sources of funds: interest rate on their loans and fees. Now they make a lot of money by fees because interest rates are so low. But on the flip side of that, I mentioned to you about private investors. Interest rates being so low means that they're not getting much money on their CDs or their IRAs or whatever. So they will be looking for higher rates of return. So on the private lending side, yes, it has affected in a good way for smaller companies to go and approach high net worth individuals and say, hey, I've got a business here and I'm looking for financing and I can offer you 5% or 6%. So that's what's really affected financing in the small business world more than the stock market. It's interest rates. Any other questions?
No, I think we are done. I don't see any other questions.
Well, thank you, everybody. I appreciate you being on here. I don't, well, is my contact info anywhere? Do you know?
I don't know.
I'm always willing to answer questions. Working with small business owners is my passion. I cannot work with you on a monetary basis. I can't help you with raising money or anything like that. I've signed a agreement with SCORE and SBDC that I'm not doing this to get clients. So, which is a good thing, because if you call me and you want some advice, I can't do anything for commercial gain, but I'm always willing to talk to a small business owner about, hey, maybe I can help you, guide you this way or guide you that way. My phone number is 505-717-9502. And if there are no other questions, I hope everybody has a wonderful afternoon.
Thank you for the presentation and valuable information, Ed. Thank you
Thank you,
to
Monica.
all of the attendees, and have a wonderful afternoon and week ahead. Please visit our website at nmsbdc.org to view our upcoming no-cost webinars or to sign up for our no-cost counseling services. The NMSBDC is here to help you during any stage of your business, so don't hesitate to reach out to us. Thank you again. Bye.
Bye-bye.
Ed, and
Yes.
you want to stay on? We'll stay on after the webinar
Sure.
and make sure everything looks good. Thank you, everybody, for spending time with us. You're welcome to leave whenever you're ready.
Hey, Chris.
Hi.
Oh my gosh. Can you hear me? Oh, sorry, guys. This was so stressful.
I'm
Those
sorry.
arrows wouldn't even work. Oh my
I'm sorry that
gosh.
I put you through all that.
Yeah, sometimes I would need to click like 5 times on the arrow to move the slides. And then when those pop-up came up, then I didn't know, is it next slide? Isn't this next slide? Oh my gosh.
There
I'm
were
so
some.
sorry.
That's okay. There were some slides in there that I thought we had taken out.
You know what we did? We did with the Chris, we took out like 11 slides. So I don't know why they were there, but we
I think
did,
when we uploaded it to the Neosera, it doesn't save our changes.
Oh, okay. So that's why, because I know that but
Okay.
we did it. Sorry, Ed, we tried.
No, it's okay. It's okay. You did great, Monica. Thank you. I appreciate
Oh my
everything.
gosh. I feel like I need a nap now.
Go get a nap. You did great. I could not have done this without you. I really could not.
Oh,
And we were going to ask you, do you want to go to an hour and a half for this webinar instead
next
of an hour?
time.
Yeah, let's do that if that's okay with
Yes.
you guys.
Yes. So you then don't need to rush, and
Okay.
I don't need to be checking telephone every 5 minutes. Like,
Okay.
oh gosh. So
I hope it was worthwhile for people.
oh
So.
yes, like you had like 20 attendees. So
Oh, great. Okay.
it was really, well attended, and it was great.
Okay, thank you.
It's only too
I can
much
only
for
give,
me.
with an hour and a half, I can only give like a 10,000 foot overview. I can't really go into, a lot of details about specific techniques and stuff. I'm gonna have to, this is embarrassing. I gotta really get more boned up on SBA lending. Since I'm an SBA volunteer, right?
Banks don't tend to want to do SBA loans. They take a lot of paperwork,
Right.
a lot of time. Well, you know.
I very rarely get, I've done 2 SBA loans in 5 years. That's what I've done. And I just kind of avoid them because it seemed like there's so much hassle for me, but.
It's like getting a student loan.
Yeah, exactly. Exactly.
Oh,
Nice.
so you like the pace and everything went well?
I need to, I'd actually had some notes that I wanted to go over, but I didn't realize that there would be no numbers on the slides because I had it done by slide number. So I got lost in my notes. So I need to do something different, but I thought the pace went well. An hour and a half would be perfect. Give me a little bit extra time to go maybe into just a couple more things, a little bit more. Because I got lost on my notes, so I just did everything off the top of my head. literally. So, but yeah, I thought it was a good pace.
Okay. Monica, you and I could revisit the slideshow, taking out the slides.
Okay. And also, those which kind of adds on, I didn't expect it. So that's why I wasn't prepared when there was a slide and then, something just was added to the already slide there. Then I didn't know, should I move? Shouldn't I? And then I would be clicking on that arrow. It wouldn't move anyway. Oh, okay. But, we did it. So.
Are you a lender, Chris?
No, I work for the Small Business Development Center and I'm an advisor here.
Oh, how cool.
So I do everything but the lending part.
Did you used to do lending or?
No.
Oh, okay. So your SBA comment kind of was like, oh, he must have done some loans before. He knows.
Oh, well, I've helped with the SBA loans. They're just more trouble than they're worth usually. Unless it's an existing business and they're an 8A business and they do an express or doing a trade loan or something like that.
Right. Well,
Nice.
again, Monica, I couldn't have done it without you. You were great. So
Thank you, Ed.
I really appreciate you. I really do.
Thank you. And just so you know, Ed, I will send you probably, I don't know if tomorrow or the latest after tomorrow, so-called management report.
Okay.
And you will just need to put your initials there and then send it back to me.
All
Okay.
right.
So
And
just so you know that.
just so you know,
to-
so this afternoon, I will be shaving my head entirely bald. I will have less hair than Chris. I
And
make
why is
mine
that?
shiny bald. So for the next month or next time you see me, I'll look quite different.
And what is the reason for this dramatical change?
So I when I was younger, I did it for sports. During the summer, I'd shave off my hair because I was really active in sports. As I got older, I like being bald during summertime.
Okay, well then.
Yeah, it's nice, Monica. You don't know what you're missing.
You should try it, Monica. You'll love it.
I have one bald husband at home, so
Got you. Okay.
it's enough. Enough of bald people in one household. Yes.
You're gonna be surrounded by us.
Yes.
Okay.
Nice. Well,
All
okay, guys, I think I need to say goodbye to you for
right,
today
thank you.
because I have another webinar at 2.
Okay.
And I need to then get ready for the second one. So do you, Ed, have something what you would like to ask me or ask us or no?
I'm good.
Okay, well then I'll send you that management report and then, well, thank you again for everything.
Great.
It
Thank
was
you guys.
pleasure to work with you.
Pleasure to work with you too. See you guys.
Okay, guys, have a nice
and Monica,
afternoon, both of you.
If I'm back in time, I'll jump on the other webinar with you. Okay.
Okay, great.
Okay.
Thank you.
See you
Thanks,
soon.
Chris.
Bye-bye.
Bye.